Hi, I'm here today with Roger Conrad from the Capitalist Times, and we're going to talk a little bit about utilities in general, and some utility stocks. So, why should investors consider utilities? What's there for them?
Well, I've found them to be very good wealth-building vehicles over time if you reinvest the dividends. They also pay pretty good dividends, and they don't fluctuate a lot in terms of pricing. So they tend to be, if somebody wants to have something they want to consider secure, those are all very big positive. We're also 10 years into what I would call a great deleveraging of the sector. Some people might remember the Enron calamity back in 2001 when that company vanished off the earth. Well, a lot of companies really got caught up in the mess, and back in 2003, the early part of that year, roughly 24 companies were either in bankruptcy or pretty close to it.
They're coming back now.
They're coming back. They've been cutting debt for 10 years. They've been cutting operating risk. So what you have is really a sector where everybody's being very conservative, and that's again a very good thing in the kind of economy we have, where things have been going along somewhat sluggishly. We also have mergers. This is a history of consolidation, is basically the history of the utility business, and we have investors like Warren Buffett that are buying these things. We have Canadian companies coming in, and then thirdly, utilities themselves are merging. So that creates a positive economies of scale. There's really never been a utility merger or merger between regulated utilities that has failed to create a stronger entity.
Are there a few particular stocks, or is there a sector ETF play that you think people should consider in utilities?
Well, I think in terms of stocks, you want to look for things that are a little bit off the beaten path. There's certainly a lot of utilities that are pretty expensive in the current market. But if you look at something like Exelon, for example, best performing utility in 2014, almost no one bullish on it at the beginning of this year. But really low bar of expectations.
Still attractive right now at these prices, current prices?
You know, they have two parts of the business, utility business. They're merging that with Pepco Holdings, which is going to create a lot of scale for them. They also have a wholesale power business, the largest fleet of nuclear power plants in the U.S. So I think a lot of upside from that as well.
Thank you, Roger.
Hey, thank you.
Thanks again for joining us at the MoneyShow.com.